Alright guys, welcome to video 6. Today we're going to talk about high probability trades. I'm going to give you a little bit of a complex overview because I want you guys to understand the theory behind what we're going to do as we progress forward. And then as we progress, I'm going to slowly strip away all the stuff that you don't need and I'm going to simplify it. So if everything is a little bit confusing, like if the last video left you with more questions than answers, then don't worry, because we will start to simplify things as we go. I just want you to have a really good base technical background on the theory of everything that we're doing, and then as we start to apply it, it'll all kind of come together like a jigsaw puzzle. Now on the opposite hand, if you finished the last video and you think now everything's going to be easy street because all we have to do is throw some lines on a chart and we're good to go, then I'm sorry to break the news to you, but au contraire, mon frere, it will not be that easy. But what we will do is we will make it definitely to where the odds are ever in our favor. All right, let's go ahead and move forward. There's the disclaimer. Now when we talk about setting up high probability trades, what we're talking about, what I'm trying to get you guys to understand is we want to be using market confluence to give us the highest probability of a place in the market where we can catch either a change in trend, like a reversal of a trend, or the pullback of a trend based on historical data to where we can then continue that trend downward. Now that's going to be our highest probability, is when we're catching the pullbacks, you know, when we're buying and selling the dips and the rallies. Catching the reversal of trend or the counter trend is going to be much higher risk, but we can still do that if we approach it from a very structured and logical fashion. All right. So where does trend meet structure? Well, let's talk about structure. There's 4 basic types of market structure. Okay. Make sure that you understand this very basic principle. You have your foundation of price, you have rise, consolidation, and decline. Now, for those of you that have watched maybe my Elliott Wave webinars, this is that same theory, only just said in a different way. There's only 4 things that the market can do. It can either consolidate and rise, and then consolidate and fall. Okay, those are the only 4 things, 2 things really, but we're talking about the 3, the waves of the 5 impulse waves of the Elliott wave, 3 levels of rise, and then a peak formation, which would be our consolidation, and then 3 waves or levels of fall where we have our retracement. So if you guys need to brush up on that, go back through Elliott Wave course. If not, we will have an entire module based on Elliott Wave theory, so don't worry, we're going to go over that in depth. That's going to be after you have already started demo trading and you're well on down the way. So just keep that in mind though. We have our 4 basic types of market structure. You have like your level 1, which is your foundation. We'll talk about like an uptrend for your 5 impulse waves and then your 3 retracement waves. Then you have rise, consolidation, and decline. I'll go over that a little more in a second. Now then you have your structure as far as when we talk about support and resistance. So when we talk about basic market structure when it comes to movement, we're talking about the Elliott Wave theory. But when we talk about market structure, and don't get those 2 confused, when we talk about market structure when it refers to price, we're talking about our support and resistance, like our major levels and our reversal chart patterns. And we'll go over the actual chart patterns in the chart pattern module as well. So like I said, I'm giving you a big overview of all of this, and we'll break these down in future modules down to the lower levels. But our reversal chart patterns are going to be our double tops, our double bottoms, like our M's and our W's, and our head and shoulders patterns, because those are the peaks of our impulse waves, and that's what's going to give us our trend reversal patterns. So we have, when we talk about structure meeting trend, I'm talking about our price structure as far as support and resistance and major levels and major chart formations meeting trend. And when we talk about trend, we're talking about our price action when it comes to our trend lines and our channels, And then also, of course, our higher highs, our higher lows, lower highs, lower lows, okay, our basic market movement, and then our trending chart patterns. So we have chart patterns that signal reversal, then we also have chart patterns that signal continuation, as well as patterns that can actually go either way. And those are going to be our flags, our pennants, our wedges, and our triangles. Okay, but again, those are trending chart patterns. And then we have three types of trades that I also want you to be cognizant of. There's only three types of trades we'll ever take. Okay, when you boil them down to their basic level, all your trading is either going to be a breakout, that's a trade with the trend, a pullback, which is an entry after the breakout because the trend has already started, now you just want to get on that trend, and then a reversal. And that's going to be your trade against the trend. All your trades are going to be one of the two because obviously you can't trade sideways. Okay? So it's either going to be up, down, or a pullback and a continuation. Okay? One of those three. So keep that in mind. Now let's talk about types of market structure. This is what I was talking about in the very first bullet point. So we have our foundation. Okay? We have our price. It's starting at like a level 1. This could, think of like a reversal off of a W formation in actual price. So we have our foundation here, price moving sideways, looking for a way to go. Then we have our breakout and our rise. Okay, so price is going to rise. Then we have our consolidation, where price is going to hit a level where it's going to go sideways for a while. It's going to take a breather. The market's going to be exhausted. Or just be pulling back for a small bit, and then our decline. And that can come in many forms. It can be, we have our fractals. When we talk about our fractal market, this can be one huge 1,000 pip movement, peak, and then fall. This can also be this can be a like level 1 to level 2, and a slight pullback, and then a continuation on to another level of rise, another level of consolidation. And this can also be something as small as the breakout on a 15-minute chart and then that slight pullback before continuing on. Okay? Remember, the markets move in fractal formations. There are patterns within patterns within patterns, so it's just a matter of what time frame and how much data you're looking at. That's going to depend on what you're seeing as far as these patterns forming. And in a future module we'll talk about, the question arises, well, how much data do I need to look at? I kind of touched on that in the last video, but it's going to depend on what time frame that you're trading on. Okay, and again, we'll go into that a little bit in the future. I just want you to get these basic concepts down of how we look for our high probability trades. And again, this is just basic Elliott wave theory. So we start with our foundation. Again, it can be a W off of, a double bottom from price falling, and then we get our reversal. Price goes up, pulls back. Okay, so we had our rise. Now we have another consolidation, another rise, another consolidation, 3 levels of rise, then we get our third level of consolidation, and we have our decline. We have our fall. Okay, so here we have just our basic Elliott wave, 3 levels of rise and a retracement. Okay. Now we have our 3 types of trades. So within that first level of rise and consolidation, so we have our level 1. Again, this is our consolidation, and this is what I was talking about, how we can have like patterns within patterns. So we have our level 1. And we have our 3 types of trades. We have our breakout, our pullback, and our reversal. So we have level 1 consolidation, and we have our breakout here in this impulse leg. And again, this can be a small push that then comes back and retests this level of resistance that's now turned support, or it can just be maybe a 38.2% retracement depending on our fib levels of this overall impulse leg. Lots of things can qualify in these three very broad general categories, but just keep in mind that they all fall into one of these three in one way or another. So we have our breakout, that's our first type of trade. We have our pullback, that's where we want to get in on the continuation of this trend. And then we have more consolidation. So here's our first level. And this is where we bring in our if-then trading plan. And this is going to be a part of your trading plan as we develop. Each one of you is going to have your own personal trading plan, but it should all be kind of centered around this if-then philosophy. And we'll go more into that when we talk about writing out our trading plans. And we're going to do that right before I let you loose into paper trading and demo trading. So the if-then says basically, if the trade goes one way, the breakout, I'll take it long. If not, then I'll take it in the other direction. And I'm looking for one of these two binary options. It's either column A or column B. The trading that you're trading is going to be much more nuanced than that when we get really into the minutia of how we look for our entries and our setups. But for right now, you want to just make it a very binary decision. If price does this, do this. If not, then do that. So if it breaks out, that's our if. We take it for a buy. If not, then it's going to drop and we take it for a sell. Very, very straightforward. Okay, and then we then go back to our market structure concept, and remember we didn't want to, it's not a valid downtrend until it breaks what? You guys should remember this back from the market structure video. It's not a valid downtrend until it breaks this higher low right here, the pullback. Right? Until then, it's still in buyer's territory. We're still looking at buyers being in control of this market. And so we add that into our overall analysis. So we have that break of structure, and now we're getting our pullback again, which is what? It's our retest. Our retest also is our pullback. And then we have that sell as well. All right. So let's talk about the four phases of market movement, and this is going to be our main game plan when it comes to looking for a trade. So when we plan our trade, right, we first start with the market trend. We have to determine, are we in an uptrend or a downtrend? Are the buyers in control or are the sellers in control? Okay, it's going to be a little more than just, is it making higher highs and higher lows or lower highs and lower lows? We really need to look at, and this is why we did that market structure exercise, are we in a valid change of direction? Has it broken that higher low? Or is it just a sideways market and we still need to only be looking for buys or only looking for sells? And we'll get really deeper into that in a couple of the next modules. But for now, just know we first need to identify what the market trend is. Once we've done that, then we need to look for our levels of support and resistance, our supply and demand. What highs and lows have or have not been broken yet? Okay, what levels have been broken through? And that's going to be also a big indicator as to whether our trend bias is correct or not. If we're looking at selling a downtrend, but it hasn't yet broken that previous higher low, we shouldn't be looking for sells. We should know that we're still in a buyer's market and we need to keep looking for buys. And I'll give you a lot of really good hands-on examples of those in, like I said, when we break down how do we determine if the buyers or sellers are in control of the market in a couple of the next modules. Then we need to pay attention to our price action. Are we hitting trend lines? Are we close to trend lines? Are we inside of a chart pattern that's going to give us an if-then breakout scenario? That's where we need to also start looking at our candlestick reversal patterns and going candle by candle and looking at what is the story that's being told right now by price action as far as, do we have strong amount of buyers in the market? Do we have a strong amount of sellers in the market? We need to look at, do we have some very large engulfing candles yet, or are we still just kind of moving sideways with very small candles? And then that's going to lead into us having our confirmation as to whether or not we need to enter the trade at that time or not. Okay, so that's going to be our plan of attack when we plan our trade. We look at the market trend, we look at support and resistance, then we confirm it with price action, and we enter the trade based on our candlestick analysis. So this is how we find a high probability setup, using those things. So here we have price, we have a reversal double bottom formation, and price is now making higher highs and higher lows. So we know our trend. Our trend, just in a general sense, is up. We're in an uptrend, so we should be looking for either pullbacks or breakouts for a buy. We're not looking for sells in this type of a market. Now we need to find our structure. Okay, we have our support, our resistance, which has now been turned into support, and again more resistance that is now turned into support. So let's set up our price action, or our trending indicator. Let's set up our trend lines. Okay, so we have these valleys connected which form our trend line. So now, looking at this chart, can you tell me almost immediately where are we going to look for price to get to take a trade? Where's the best possible place that if price hits this area that we would want to take a trade? That's going to be our confirmation when price hits that area. And the area is right here, right where structure and trend meet, or in that general area. It can be a little bit higher, a little bit lower, but in that area, that's going to be our kill zone. And when price enters that area, now we have a high probability setup to take a very, very high quality trade. These are the trades that we need to look for, and that's going to mean that you're going to have to be patient. You're going to have to sit on your hands through a lot of trades. You're going to have to wait for these very, very high quality trades to set up, but that's the whole point. You don't want to be taking just any trade, because if you are taking just regular trades, your win-loss ratio is going to be around 40-50%. You're going to lose half of the time. If you can have the patience to wait until these high quality setups happen, then your win-loss ratio is going to start going up. You're going to take less drawdown. You're going to be less stressed out when you trade. And that's really the whole point of going through all of the analysis, is to find the trades that are actually going to pay off, and not just giving your market away or your money away to the market like all the other retail traders are doing. You don't want to trade the same way the other retail traders are doing. Okay, so we want to take that for a buy and take it on up. Let's take a look at our first example. Now this is actually a live example that's happening right now, and I'm going to take you to the live chart in a second. And this is a trade that was actually set up in a live trade room earlier this morning, and so I wanted to use it as a very relevant example because we are in this trade right now, as a matter of fact. So you look, we know that we're in a downtrend. This is on the daily, so we're in the beginning of our top-down analysis. We're in our higher time frame. And we have price, it's making higher or lower highs, lower lows, lower highs, lower lows. We're in this channel. Okay, we have this trend line drawn. Price has been falling. It's come down to the bottom of this channel, and here we have this counter trend line here. Okay, this counter trend line was kind of serving as a counter trend trade. When we had price hit the bottom of this channel, you can draw this, and as long as price stays in this trend line until it reaches the top of the channel, you can take that for a short counter trend trade. But that's not the trade that we're looking for. The high probability trade that we're looking for is right here. You see right here where we have this very, very strong support level. Well, it's resistance now. It was support. It got rejected. It got broken through, and now it's being retested currently. And right here is exactly like I was telling you. This is exactly where we want to take our trades at. So let me show you the live chart. Okay. All right, here we have the live Australian dollar, Japanese yen chart. And as you can see, we're already very deep in this trade. We were about 40 pips up earlier, about 40, 50 pips up. Now we're about 30. Our stop loss has already been moved to break even. So now this is down here, and this is a completely risk-free trade. Right? So it's exactly what we talked about. We waited until price came up and hit this level and the trend, the trend line that was the upper limit of our channel, and that's where we entered the trade. Once it hit that, that's when we waited, and we waited for our price action to confirm that we were good to take an entry by doing our candle by candle analysis. Now we had these two engulfing candles right next to each other, almost tweezers. They don't have very long wicks, but we have a set of identical twins here. Then we had this very long wick spinning top. And in the next module, I'll be having you guys go through and learn and label every single type of candle so that you have your candle by candle analysis down, because doing our Japanese candles is very relevant when we start looking for what are the buyers and the sellers doing. Right here it's indecision. But then when we had this doji right here, we knew that we were good to go ahead and enter the market, and that's where we entered. We took a very, very small amount of drawdown and then straight into profit. And it's been dropping ever since. And our take profit is this counter trend line now. And when it breaks through, we'll scale out of half of our position, and then we'll let the other half ride down to the bottom of this overall channel, which will be a swing trade for us. So this trade will be our intraday trade, and then the other half will be swing, and we'll also scale into more positions if we do get this break and then a retest of this counter trend line. And that'll be our pullback for our second entry. So again, and we'll be able to use the equity that's built up in this first trade, because we'll take 50% off, we'll still have 50% here, and then we'll match that trade, and then we can have all of this be our stop loss if we want. I mean, we wouldn't hold on to a position that long, but it's completely risk-free, because then we're using the market's money to trade with if everything goes to plan. Okay. Otherwise, even still, right now, this whole trade is completely risk-free. Okay, so you see, we're looking for these areas where we have, again, trend meet structure. Here's another great example of trend meeting structure. We have the beast, pound sterling, Japanese yen, and if we pull this down, we can see we have this trend line that was formed on the daily chart. Very, very strong trend line. Price was respecting that very, very well. And so on here, we actually have two different trades that we were able to get into. Right? We have this trade right here that when we saw this massive wick form on this candle, even though most people would see this big bullish engulfing candle and think, okay, I want to jump on, I want to jump on a bullish trade. I want to go long on GJ. Okay, we still had this high probability setup that was telling us that this is going to at least pull back down to this support level here. Okay, this previous lower low, which is exactly what it did. So we had this, again, long-legged spinning top, which showed us there was huge indecision in the market, that price didn't want to go any further. We enter here, and then this was an easy 118 pips. Easy, right? We wanted to exit, though, right here about 82 pips down right at the support level, because you don't want to be greedy. Take it down to the next level of support and then put the rest on as a runner. But then as we had this engulfing bullish candle here, as it engulfed this previous candle, okay, morning star formation, we knew we wanted to go ahead and get out of the trade, but then we had this counter trend now, this counter trend. And we had price breach this trend line, come back, fake break back into this trend line, come back up through this counter trend line, and then once it broke this level of support and here, we knew we were good to look for buy opportunities. It wasn't time to buy in right then and there, but it was time to start looking for some counter trend trade buys. And so right now, we're looking to take this counter trend trade off of the pullback to this level here. Okay, so we're having trend meet structure at this point as well. And again, this is going to be more. This is going to be an example of when we have these near misses, where price is more than likely not going to pull all the way back to this counter trend line. If it does, then we'll look to take an entry there. But this trend line now gives you a good guide as to where to put your stop loss, because if we see price coming down towards this trend line, if it gets stopped out here, we'll stay in that trade, but if it goes beyond this trend line, then it's an invalid analysis and we'll just want to jump out of that trade. But our take profit's going to be up here at the 200. And you know, we don't know yet if this is going to play out yet or not. This is another trade that's in development. But currently, we're about 5 pips into profit because this one just set up, as you can see, about 30 minutes ago when we got this rejection candle here, and then this candle here, tapping our support level. And so if this support level holds, we should be good to take it all the way up. This one's going to be about 100 pips if this one plays out. Okay, so that's how you want to look for your high probability trades. You want to look for structure meeting trend. It's not always going to play out, but these are the trades that will play out more often than they won't. And this is a very simplistic way of looking at it. I understand that. We will get deeper into looking for proper setups, candlestick analysis, things of that nature. But right now I just want you to look at these trades in this very general sense of trading at major levels with the trend and with the trending structure. And in the next video we're going to show how we can then use our chart patterns like our triangles and our pennants and our flags to kind of trap price, as we saw in the in that consolidation example a couple slides ago, into making a decision one way or the other. And then that's going to tell us which way we want to take our trade. So that'll help us kind of trap price into making a decision, and then we will take an if-then trade based on that analysis. All right, guys, I want you to watch this video 5 times. Really, it's a lot of information, so I really want you to go over it. Make sure that you have a handle on all of it. Like I said, in the next video, we'll be talking about chart patterns, and then after that, that's going to be the end of Module 2. Then we're going to jump into doing our candle by candlestick analysis. We're going to have an entire module based on the Japanese candlestick course. And then once you're done with that, then we're going to start looking to set our trade plans, getting our strategy in place, and doing our demo trading. So demo trading's coming soon. We just need to do a little bit more foundational work, and then we'll be able to jump right into it. So I want you to do 5 charts showing me levels of consolidation in a trending market. Basically, I just want you to show me, like on a daily chart, like I showed with the Elliott waves, I want you to show me levels of rise and levels of fall based on price movement in an uptrend or a downtrend. And then I want you to mark up 10 charts and show me trending markets with using either like I just showed in the example on AJ and GJ. Show me trend lines where price meets at a major level of support or resistance. So I want you to show me where price meets trend and show me where you would have taken that trade at, whether it's a near miss or whether it's right on that level of support or a retest or a breakout. Show me where those trades would have happened, and then I send them to me and I will take a look. Let me show you a quick example of what I mean as far as the levels of rise and levels of fall. So if we just take just a random chart, jump out to a high time frame, okay, zoom out, there we go. Right here, like we have level of consolidation here. Yep. Then we have our rise, level of consolidation. Yep. This one, instead of continuing on up, drops down, gives us another level of consolidation. Then we rise, consolidation, fall, consolidation, just like that. Rise, and then this one just drops. But I want you to recognize where your trending markets are, or where your consolidating markets are. Drop. Looks like we might be starting a level of consolidation here. Okay, so if you guys have any questions about that, hit me up. Okay, here. Okay, so there's always going to be a range. Breakout, consolidation. Breakout, consolidation. Breakout, consolidation. Small break, and then you get that ping pong break. Okay, so it doesn't always have to be 3 up, 3 down. Markets never move perfectly, but I just want you to be able to spot when price is moving sideways in a range, what that range is, and then once it breaks out of that range, like look here, we see this, it broke out and retested right here. Here's our pullback entry, and then straight to the moon. Alright guys, that's it for this video. Again, watch it 5 times, send me the homework when you're done. If you have any questions, let me know, and I will see you in the next module.